I confirm if you can see my screen.
Yes, I can see it.
Okay. Okay, so I said we'll be moving on to accounting for inventory for today. And yeah, what do you understand by inventory?
All right, sir. In simple terms, I understand inventory are stock or stock in a layman's term, or what the company deals with. That is the main material, the optional for sales.
Okay. Yeah, it can be referred to as stock, can be referred to as item, goods, merchandise, materials. So that is what we're talking about. That is what we refer to as inventory. Let's move a little bit. Inventory. This is the accounting for inventory. Inventory, this is the accounting of items, component parts, raw materials that a company either uses in production or sells. It refers to all item, goods, merchandise, and materials held by a business for selling in market to earn a profit. Now, when you're talking about inventory, you're talking about items, component parts, raw materials. You did manufacturing account while in school as a commercial student here.
Yes, sir.
So most definitely you would have heard of raw material, work in progress, finished
Yes,
goods.
yes.
Yeah, those can actually also be classified as inventory. Every part of them can be classified as inventory. I I have I'm actually selling, let's say, uh, what example can I use? But you know what raw material is here?
Yes, sir.
How about work in
Computer.
how about work in progress?
Yeah, it has not been finally processed. It has not been made available for finished goods.
Yes,
It's the next stage for finished goods.
and finished good is that in which finished good is that in which
The goods are finally processed and
you
available.
have them in your warehouse, you have them available for sale.
Yes, sir.
Now I'm saying a company either uses in production or sales. It refers to all goods merchandise held by a business for selling in market to earn profit. Now, he said uses in production or sale. You know, a car can be an inventory for a particular kind of company.
Mm-hmm.
What kind of company would a car be an inventory for?
An auction company, a showroom company.
Yeah. And it should be PPE for other kind of companies here. It will be PPE for, let's say, I produce washing soap, and the car I have is what I use for distribution. That car there is
Okay.
not an inventory, it is PPE for me. Do you get
So it's always PP.
property, plant, and equipment
Okay, okay, okay. So
under your fixed assets? That is non-current assets.
yes, sir.
Yeah, your land, building, those are items, assets that has a useful life of more than 1 year. Non-current assets. The current assets are those that can easily converted to cash and has a useful life of
Yes, sir.
0 to 1 year. Yeah, 0 months to 1 year. Now, so a car is a PPE because it is not what I'm selling. It is just
Mm.
using the natural course of the business. Do you get?
Yes, sir.
But it's an inventory for an auction firm, a firm that sells car, a firm that manufactures car. Do you get?
Yes, sir.
Okay. Now moving on, the procedures and documents. The procedures for purchasing material and documents used in accounting processes differs according to nature and size of the business. Now, in a large company with purchasing department, a buying department, and a store department, the procedures for purchasing material might be as follows. The store department identifies a need to reorder an item or raw material for inventory. Reorder. Do you know about that, or I should explain? Reorder. Have you heard about that before?
Yes, sir.
Okay. What is reorder?
Do you say pre-order or reorder?
Reorder.
Okay. Uh, a goods that is placed on order again. Um, for you had goods before, you bought it before, so you want to have another particular number kind of
Yeah,
goods.
just like topping up particular number of goods you have. Now, it produces it produces a request to purchasing department to buy the quantity of material. This request is called a purchasing requisition. A purchase requisition, it should be properly authorized by a manager with authority to approve such requisition. Now it's telling us that the procedures to actually purchase materials and the documentation actually differs in respect to the kind of company it is. Now, what you're telling us that in a large company now, okay, me and you, we run, let's say we have a small company, are you there?
Yes, sir.
And we run, let's say, production of liquid soap.
Okay, sir.
Okay. We would most probably, it might just be maybe just two of us or one additional person, three of us, that we have a little store. We mix what we need to use. Maybe you are the one doing the mixing, I'm the one doing the filling inside the bottle, then the other person is doing the packaging. Every one of us is doing our jobs, and yeah, we are done here. We have produced the liquid soap. Now, when we want to buy materials for liquid soap, Caleb, this item that we use in producing liquid soap has finished. How much do we have on ground? Take this, go and get this. That's the normal procedure because we are a small firm. Do you get?
Yes, sir.
But when it is a large firm, we need to include the store department, the purchasing department, and even maybe sometimes internal control. The store department will be that okay, now for a kind of factory now, let's say for engineering department needs a particular kind of
Mm,
machine, they go to the store department and the store department says, okay, oh, this machine is not available now, we need to buy. You know, the procedure started from the engineering department
mm,
needing the machine. He went further to the store department saying the machine is not available and it needs to be bought. Then they raised a purchase requisition for the purchasing department to buy that particular machine. Are you there with me?
yes, sir. Yes, sir.
Then the purchasing department tries to get suppliers who can supply them that particular machine. Then look for the best cost supplier and then purchase that particular machine. They get it, they pay, it arrives at the store, then the store issues it out to the engineering department. Now you see that the steps is a little bit more
Longer.
longer. It requires plenty of signatures, it requires plenty of authorization, plenty of documentation, paperwork,
Mm, yes, sir.
different people because it's a larger firm. Do you understand that?
Yes, sir.
So that is why they're just trying to tell the difference between a smaller firm and that of a larger firm.
Okay.
Can you hear me?
Yeah, I can hear you now, sir.
Okay. Now moving on. Um When the supplier delivers, okay, this is just what I just explained earlier. So you might just go through this particular area so you understand how you get the store department prepares the good receipt note. That's when the supplier supplies that particular order, recording the details of the material received. This includes inventory, identity code for the item, as well as quantity received. Copies of delivery notes, goods received notes are sent to the account department. They match the copy of the purchase order. Do you see, when I mentioned now, I didn't even mention the account department. Before money can leave, the account department needs to see that, okay, this is what we are going to buy and this is the money what. When money leaves and even they actually get the goods, it still goes back to the account department that, okay, this is the goods received note. This is what we said we were going to buy. This is what we later got. Does it tally? Do you get?
Mm.
If
Yes,
you
sir.
don't tally as an accountant, I believe you would actually there's a 3 million naira difference there. Where did this 3 million naira go? We receive shortage of 3 million naira in goods. Definitely, it's either they're refunding us back or we're using it to get something else. Do you get? These
Yes,
are
sir.
questions you ask as an accountant because that passes through you. Now, so the purchase process. Now, usually, I can't not come out and ask you purchase process in theory parts. Even you looking at this one, even with what we have said practically, if and you don't even read it again till exam time, if they ask you purchase process, I believe out of these 5 steps, you'll be able to like come up with 4 or even the 5, but maybe not just the exact words, yeah.
Yes, sir.
Yeah. So your short answer question is usually where I can I just is it short answer question or OBJ? Do you guys do short answer question or is it here that does short answer question?
Is that filling the card?
Yeah,
I've not come across it in the past question I'm seeing.
that means but you have come across OBJ.
Yes, OBJ and
Okay. That means it's 8 years that you guys don't. So you can just come in and say, okay, after the purchase order, what's the next step? Definitely next delivery notes from the supplier. So familiarize yourself with this, the purchasing process, purchase requisition. We want to buy this particular thing. This is what we want to buy. This is what we need. Purchase order, okay, Mr. Supplier, Mr. Caleb, the supplier, help us get 5 bottles of this particular hair cream. Do you get?
yes, sir.
Then delivery note. Mr. Caleb says, okay, I have this particular hair cream. He delivers and he attaches a delivery note to it and goods received note. Okay, we have actually received this particular goods. Then the purchase invoice. After payment, purchase invoice, we receive this particular goods and receive this amount of, we pay this amount of money. Do you get?
Yes, sir.
So the goods received note, the purchase invoice, everything is with your firm.
Mm.
Now moving on, we have inventory records. Now, even from what I've said earlier, inventory records, you know, the store department should keep records of
Yes, inventions.
inventories. The cost accounting department should definitely keep record of inventories. Then the computerized inventory control. You have a system in which you enter inventory. Really, nowadays, people don't do it, just paperwork. You have a computer system, you have a particular software. People actually, even in D2 warehouses, shops, people are already using um softwares a lot.
Mm.
People are already using softwares a lot. So you definitely have a computerized inventory control system in which, okay, we received 100 goods of this, 100 pieces of this, 100 items of this. You put it in the computerized system. So anywhere, any place, your maybe your head of department, your accountant wants to like, okay, how many this or how many pieces of this do you receive? I don't need to call you and say, okay, Caleb, how many do you receive? I definitely know you had imputed that in the system, computerized system. So definitely I will go on there to check Even in terms of audit, internal control, I can okay, oh,
Mm,
you guys say you received 100. I go to the warehouse. Is it really 100 that you guys received? It makes things easier. So that's why those records must be kept. Now, value of inventory. Basic rule. Inventory is measured at lower of costs or net realizable value. What do you understand by this? You definitely have. You said you did accounting education.
yes, sir.
You definitely have come across this. You have done cost accounting, cost management.
And we really didn't go deep in that cost accounts. We did it in our final year. It was called managerial accounting.
Okay. Now, what do you understand by lower of cost or net realizable value?
Let me say the cost of the item after the depreciation or after the expenses.
Which are you explaining?
The net realizable value.
Okay. Come again, let me understand that.
Like the net realizable value, according to my understand, like the amount of the inventory after depreciation and expenses.
Are inventory depreciated?
It can be, yeah, just like what is it called? The auction company, the broadcast manufacturing company. So probably due to long time before sales, so it can depreciate, or it can lead to it can lead to what is it called, a fault in the car, so which needs to be repaired.
Inventory generally is not to be depreciated, but it just comes to some particular kind of inventories. Now, we're talking about the basic rule of inventory, how inventory is evaluated, how inventory is calculated. Now, we said lower of cost or not realizable value. This particular hair cream, it cost me 100,000 naira. Let's 100 naira, 100 naira to actually produce this hair cream. Yeah, are you there?
Yes, sir.
That's my cost. Now, net realizable value is if it cost me 100 naira to produce this hair cream now, are you me? But this
Okay,
hair
sir.
cream can be sold for this particular amount. You know, there are some times in which it costs a particular. Let me use this example of it cost me 100 naira to produce the hair cream now, and the hair cream can be sold for 95 naira. Are you there?
Okay, sir.
There's something we call selling costs. Because I want to sell this hair cream now, it can now be sold for 95 naira. 5 naira is my selling price, selling cost. Do you get? The
Okay, sir.
cost me to sell. Next realizable, how much after removing selling cost and other expenses, how much is it valued at? I remove let's say selling cost is only this thing. It takes me 5 naira to sell this particular product. Now the 5 naira now it makes it 95 naira. My NRV is 95 naira. Next realizable is 95 naira. Why my cost is 100 naira? Inventory IAS2. Sorry, I didn't mention before now. In accounting standard, IAS2 is inventory.
Yeah, yes, sir.
Yeah. So my cost is 100 naira. My net realizable value is 95 naira. IAS2 says you measure inventory at lower of cost or net realizable value. Cost and net realizable value. Anyone that is lower, that is what you measure inventory with. I said it cost me 100 naira to produce this hair cream, but my net realizable value is 95 naira. What do I value my hair cream as? What amount? What amount
Okay.
do I value hair cream as?
Sir,
What amount do I value my hair cream as?
95 naira.
95 naira. Thank you very much. In other cases, your NRV might be more than your cost. Do you get?
So, so
Or
the cost will now be the valued amount.
eh?
I said in that case, the cost will now be the valued amount.
You know now what we're trying to get value of inventory. The value of
Yes, sir.
inventory you are putting down is what you'll be putting down inside your balance sheet or something. Do you get? So
Yes,
it
sir.
is that 95 naira you put it down inside your balance sheet, not 100 naira.
Yes, sir.
You get me?
Yes, sir.
Mhm. Inventory
So,
must be measured in the. You want to say something?
okay, I'm saying that if the what is it called, the amount of the cost is lesser than the net realizable value, so is it that amount of cost you put down in balance sheet?
Yes.
Okay, is the what is it called?
It's the lower
Is
one
the
we always
is the
put.
lower one?
That's
Okay,
why they
okay,
say lower of cost and net realizable value.
okay, sir, okay.
Yeah. Inventory must be measured. Inventory must be measured in financial statement at lower of cost or net realizable value. Net realizable value is the amount that can be obtained from disposing the inventory in the normal course of business. Now, from disposing the inventory in normal course of business, this hair cream, if I want to sell it, it's still disposing. Do you get?
Yes, sir.
Yeah, I want to sell it now. What I'll be getting from it is 95 naira because to sell it, I'll be spending 5 naira. So 100 naira minus 5 naira will give me 95 naira. Normal cost of business. Less any further cost that will be incurred in getting it ready for sale or disposal. Do you get?
Yes, sir.
Now, when it comes to disposal actually sale is me selling it. Disposal now talks about we don't need this inventory, we don't need this item again. We want to clear it off our books. Do you get?
Yes, sir.
A particular item is no more needed. You want to clear it off your books. Okay, well, let's get rid of this thing. Sometimes there's a cost to get rid of something. Shouldn't get me.
Yes, sir.
There's a cost to get rid of something. This particular this thing, because I want to get rid of it, I have to like take it down to a manufacturer's place or something. Let's say a particular item now, I want to get rid of it. I can only get rid of it maybe because I will take it down to the manufacturer space. The cost of taking it down to manufacturer space is a further cost, is a cost of sale. Do you get me?
Yes, sir.
Yeah. So moving on. Are you your bio, your pen and
So,
yeah, okay. Now read out this example, please.
a business has four items of inventory. A count of the inventory has established that the amount of the inventory currently held at cost are as follows. So, inventory item A1, the cost is 8,000, while the selling price is 7,800 and the selling cost is 500. The inventory valued at A2, cost is 14,000, selling price is 18,000, while the selling cost is 200 naira. Inventory item at B1, the cost is 16,000, selling price is 17,000, and selling cost is 200. Inventory item at C1, the cost is 6,000, selling price is 7,500, while the selling cost is 150. The value of the closing inventory in the financial statements lower of at A1, it is 8,000 or 7,800 minus 500, which is 7,300. So A2 is valued at 14,000 or 18,000 minus 200, which is 14,000. B1 is 16,000 or 17,000 minus 200, which is 16,000. So C1 is 6,000, which is 75 minus 150.
So yeah, let's
So,
do it together. Now
okay,
they said A1 now cost 8,000. This is the cost of A1 here.
yes,
Yeah. And the sales price is 7,800. This is the cost, this is the initial cost of this item A1. Now, if I want to sell A1, I'll be selling 7,800. But for me to sell it to have a selling cost of, I would spend 500 naira to sell A1 at 7,800. That means eventually, if I sell it at 7,800, if I remove my selling cost, what would I be left with?
7,300.
7,300. Now, what is the value of our inventory? Our NRV is 7,300, yeah?
Okay. Yeah.
Selling cost. Selling price and sales price and a selling cost. This gives us 7,300. But our cost is 8,000. What is our value of inventory?
7,300.
Why?
Because it's the lowest cost of inventory.
It's the lower between the NRV and the cost of inventory. Now, item A2 has cost of 14,000 naira. Its selling price is 18,000 naira. Why the selling cost is 200? If I remove selling cost from the selling price, we have 17,800 here. What would be our value of inventory there?
14,000. Yeah.
Because it's the lowest here.
Yes.
Okay, for B1, uncle,
B1 will be 16,000 because if you deduct 17,000 from 200, you still have 16,000, uh, 16,800.
okay. Now, for C1, yeah,
You still have 6,000.
okay. Do you understand the logic behind lower of net realizable value?
Yes, sir. Yes, sir. Sorry, sir. Is this also regarded as the closing inventory or closing stock?
Yeah, this is what you use as closing stock now.
Okay, sir.
This is the value of inventory. That at a particular point in time, this is your lower of cost and net realizable value is your value of inventory. So now when you want to input inside what do they call it?
Financial
Input
position.
financial statement, yeah. It is this value that you input. Do you understand?
Yes,
This
sir.
is your value at this point in time. Now, do you understand the logic behind cost and
Yes, sir.
net realizable value? Okay.
Yes, sir.
Now, cost formulas. For inventory which are particularly large in size and expensive, it might also be possible to calculate and recognize actual cost. But in practice, it's unusual because the task of identifying actual cost of inventory items is impossible because of larger number of items. Now, when you have, are you listening, please?
Yes, sir. Yes, sir.
When you have a warehouse in which items that are there are like 1,800,000, 500,000 items thereabouts. It's actually very, very hectic doing lower of cost or net realizable value.
Mm,
Yeah. So now accounting for inventory is now telling us that a system is therefore needed. Now this system is one in which we call first and first out, WAFCO, and that which is weighted average, then last in first out, which is LIFO. FIFO, LIFO, WAFCO. Have you heard about any of these before?
yes, I've had a FIFA and before.
Okay, what do you think FIFO is?
First in, first out. So this is practically used by majority of business. That is the first category of stock or inventory brought to the company will be the first amount of good that will be sold. So any other goods that comes in after will be the last or second to sold. For instance, if the company purchase 500 items of the inventory. So and later purchase 700 items. So and the customer requires to buy 600 items. So the first 500 items will be sold. Then extra 100 will be sold from the second 600 item that was purchased.
Yeah. Now
So
you just talked about FIFO, right? and it's the
Yes,
other
sir.
way around for LIFO.
Yes, sir.
Yeah. But in practice, okay, you just talked about the stock, especially. Now, if you're talking about costs, the first 500 items came in at 200 naira each,
Yes, sir.
and the next 500 items came in at 250 naira each. When you want to
Mhm.
sell 600 items, what do you do?
You sell the first 500 that came in at 29 each. Then you sell 100. If this investment wants to buy 600, sell 100 out of the many 500 that are coming. But that one will be selling at 250 naira each.
Okay.
So the
Sorry,
price
give
is
me,
showing it common.
all right, give me a minute, please. Let me quickly cut this call.
Okay.
Yeah, can you hear me?
Yes, sir, I can.
Okay. So now you said we would do the first 500 at 200 naira, then the next
Mm.
100 at 250 naira, right?
Yes, yes, sir.
Caleb, if you come to buy a product from my warehouse and I sell, you want to buy 600 and I tell you, I'll sell 500 for you at 200 naira. Then I'll sell 100 for you at 250 naira. Wouldn't this seem somehow?
It's real. It's real.
Yeah. For you as an accountant, you might just think about it that this person will try use FIFO for me. I be LIFO, I be.
Yeah. Yes, sir.
But a normal person will actually like kill a tablet si fún mi ní 200 naira. Kill a tablet si fún mi ní 200 naira. So now that's why we have WAFCO, weighted average. Now, weighted average is now saying, okay, oh, instead of you doing one 250 naira, one doing 200, oh, why not sell it as an average price? You want to sell 600 units now. Now, what you now do is, okay, oh, you get the average of those particular prices. You know, some of them came in at 200, some of them came in at 250 naira. Are you there?
Yes, sir.
Yeah. What WAPCO is not telling us that instead of selling at different prices, just get the average. Get the average and sell at the average. When it's going out, get at the average. When it's coming in, you already know that is this average amount. Is this average amount that is coming in with? Do you understand?
Yes, sir.
Yeah. So you already get the basics of FIFO and LIFO. I'm going to send a question, just one question. You solve FIFO for me, you solve LIFO for me, and WAFCO for me. Or do you need me to solve WAFCO for you?
Okay, just an example.
Okay. I'll check if I should have. Sorry. Let's continue this first before we move on to the example. Now, I told you, was it you or the other person that I told that we might have to just start doing classes once, maybe during the week. I'm not so sure of my own time yet because of Ramadan. It's very hectic for now. But
Oh,
yeah, but even if it is an hour during the week, even if it's an hour during the week that we'll be using just to kind of round up things and all. Do you get?
okay, sir.
Yeah. So that is that about that. Now, okay, this is just explanation. The first method assumes that first and first out. The first method assumes that first unit making its way into the inventory or the oldest is first sold. Bakery produces blah blah. You already understand this here. Sorry, a minute, please. I don't know. A call is disturbing my service, and I don't want it to end this call. I'm just
Okay, sir.
yeah. So for LIFO, inventory valuation means based on assumption that the assets produced or acquired last are to be expressed. In other words, the last in first method, the latest purchased or produced goods are removed first. Now, weighted average. With weighted average method of inventory valuation, it is assumed that all units are issued as current weighted average cost per unit. The normal method of measuring average cost is perpetual basis method. With the perpetual basis WAFCO method, a new average cost is calculated. I told you you have different prices. You have the first goods came in at 250 naira. The next good came in at 200 naira. The next one came in at 300. And goods that are coming in 1,000, 1,500, 1,800. Do you get? It
Yes,
is
sir.
it's a lot to start calculating. Okay, this one came in at 200. How many remain in this one? Just it makes it easier when you do weighted average. Now, weighted average cost is cost of inventory currently in store plus cost of new items received. Are you there? You received the
Yes, sir.
first one, the first 500, 250 naira. You receive the next 1,000 units, 800. You receive the next one, then you receive the first one, 259. You receive the second batch, 300. You receive the next batch, 250. Add every cost that you received. You get
Yes,
the
sir.
current cost and the new cost, add it together, divided by the number of current cost, the number of current units, and plus the number of new units. Are you getting me? You divide the
Yes,
total cost by the total number of units. Show here.
yes, sir.
That is what weighted average is. Simple calculation, simple logic. Weighted average cost of inventory currently in stock plus cost of new item received divided by the number of units currently in stock plus the number of new units received. Now, okay, let's solve this. Are you your pen there? You are doing all these calculations for me. Hmm, what should you solve it as? FIFO, LIFO, or weighted average?
Okay, let's use weighted average.
Okay, but yeah, let
So,
me let me do an Excel sheet. We'll make use of an Excel sheet using my screen. Hmm, should be it. Yes. One, two, three. This is six. Mm, okay, confirm if you can see my bottom border. I need you to confirm. See my screen anyway. Okay. Sorry, present sentence. Yeah, can you see my screen?
Yes, I can see it, but I'm seeing the present. Okay, I can see it now.
Okay. Now, um, for the first one, now read out that question, please.
On 1st January, a company had an opening inventory of 100 units, which cost 50 naira each. During the year, it made the following purchases: 5th April, 300 units at 600 naira; 14th July, 500 units at 70 naira each; 22 October, 200 units at 80 naira each. During the period, it sold 800 units as follows: 9 May, 200 units; 25 July, 200 units; 23rd November, 200 units; 13th December, 200 units.
Okay. Now, okay, let me just. You know, they mentioned they mentioned our sales and our purchases. Now,
Yeah,
for you to do anything eventually, you need to take it per date, not just because they put every purchase there, you input every purchase. No, according to the date. Are you there?
yes, sir.
Now, the first date is on January 1st, 01. On January 1st, the company had an opening inventory of 100 units, which cost 50 naira each. 100 units, Abby.
Yes, sir.
Now, 100 units, January 1st. So this is balance brought forward, yeah. We need to have a unit too. Units. Okay, how many units? 100 units, yeah. Are you with me?
Yes, sir.
At how much?
15 naira.
15 naira. Now, what is the value of what we have in our store? What is the value of what we have in our store at January 1st? Eh?
50.
The value.
Okay, what we have in our store is 100, 100, 100.
I said the value. We have 100 units and one costs 15 naira. So what is the value of what we have in stock?
100 times 50,
Mhm.
5,000.
Now, yeah, 5,000, yeah. Okay. Now, what's the next date on that sheet?
So it is 5th April. The purchases.
Okay, still purchase here.
It's three purchase now.
So I need to put this as a date. So it's you want to see it as a date. Now 01 style. This is fifth Abby. Another purchase here. What did you say? Purchase is
300 units at 16 naira.
300 units.
At 16
Uh-huh.
naira. At
At
16
what?
naira. 16
16
naira.
naira. Okay. Now what is the value of?
18,000.
Is it 18,000? We are
Yes.
doing weighted average. So you come and do your calculation here. Okay, this is 18,000. Let's put it as 18,000. 18,000. Yeah. This 18,000. Now, we said we have 18,000, Abi.
Yes,
Weighted
sir.
average. What is the total value of our stock?
That's 400.
400. What is the total amount?
That is one.
1,100, Abi.
Yes.
Is it 110? 110, 50 plus 60.
Yeah, 110.
Yeah. And we said, go back on your calculation, on your weighted average formula. We said cost of inventory in store plus cost of new item. We already did cost. This is this, right?
Mm-hmm.
This is, sorry, this should be this. You said cost of inventory in store. This is for WAFCO. Number one, WAFCO. Now, you said cost of inventory in store. Abi,
Yes, sir.
what is our cost of former inventory in store?
For my event is 100.
100. Cost.
Oh, sorry. 50 naira.
50. Plus the new inventory.
The new event, that is 60.
60. And we said
Over
that will be divided by what?
number of units currently
Uh,
units in stock
100.
plus
Plus what?
number of new units received
Okay.
plus 300.
300. Now do this and let me know what's the answer. Oh yeah.
100.4.
Sorry. What did you get?
A minute, sir. Three oh one.
How is it 301? 50 plus 60
Divided by 100
plus
plus
300. What did you get?
301.1.
301.
Point
No.
one.
What kind of calculator are you using? Your phone or normal calculator?
I'm using a calculator. Cashew calculator.
Cashew. Is it scientific?
Yes, sir.
Then why are you getting something that is wrong? 50 plus 60 divided by 100 plus 300. Um, I don't know what kind of calculator you are using, but you get something that is wrong if the calculator is not a scientific one. Now, do
Okay,
50.
I got
You got what?
350.6.
3.
50.6.
This is supposed to be giving you 50.15. I'm coming. 50 plus. What is from that says cost of sorry. This is we are supposed to use the value. Are you there?
Yes, sir.
I'm supposed to use the value. Sorry, I missed that up. This is are you looking at my screen?
Yes, sir.
5,000 plus 18,000. Tell me where's the answer now?
530.
5.
30.
What did you do?
The value 5,000 plus 18,000 divided by 300 plus 100.
5,000 plus 18,000 is giving you what?
23,000. 2,000. 23,000.
Divided by 400.
Yeah.
What did you give you?
530.
530. Punch that calculator again. 23,000 divided by 400.
So 57.5, sir.
57.5. So this
Yeah.
will be 57.5. And now this will now be 57.5 for the 400 units. I don't need it to approximate one of this. Yeah. For the 400 units is 57.5. Do you get that?
Okay, sir.
So we'll be selling those 400 units at 57.5. If you do 57.5 times 400, you see that you are still getting back your 23,000. Do you get that? 23,000, which is the total of what you bought it exactly. Do you understand?
Yes, sir.
Okay. The next thing now is to sell, right? 9th of May is the next this thing. So 01 times 09. Now, to sell, what do we have?
So sales
How
are
many, how many units are we selling?
200 units.
200 units. How
Yes, sir.
much will you be selling it as?
They didn't specify the amounts.
You are doing WAFCO now. That's why I did WAFCO before.
Okay.
We'll be selling that what?
Okay, what did I have it? 57.5, 57.5.
57.5. That means the total value of what you sold now is what? 200 times 57.5, which is what?
11,500.
11,500. What's the next date?
It's still night of me, another night of me. So it's 25th of July.
No.
But the next previous date is 14th of July. That
14th
is
of
for
July
14.
now.
14.
July 14 is what?
Purchase 500 units by 17 naira.
Let's leave dates for now. Purchase, Abi.
Yeah.
500 units.
Yes.
At what?
17 naira.
17 naira.
Yes.
17 naira, right?
Yes.
Okay. Now, this is now give us what?
35,000.
35,000, Abi. We should
Yes,
do
sir.
what, Abi?
Yes, sir.
We should do AFCO because we have another additional. Now, if we want to do AFCO now, what we will now be doing is how much this is how much of this particular amount is left?
23,000.
23,000. How much of the 23,000 is left?
100. Okay, we sold how much out of it? We sold 200 units.
We sold 11,500 out of it already. Abi?
Yes, sir.
So we are left with what? We are left with 11,500 now. Abi?
Yes.
Yeah. So it's got to 11,500
Minus
Abi
23,000. Yes, yes.
plus the old sales, the old current cost of this thing in stock plus the new cost. The new cost is 35,000 now.
Okay.
Will now be divided by what? The number of current unit old stock plus new stock. We have how many in stock now? 200, Abi.
Yes, sir.
Plus we bought what now? We bought what? We bought
We bought
500 units now.
500 units at 17 naira.
500 at 17 naira. So now, for us to get our WAFCO now, it now be what? It now be
700.
is equal
Right?
to 46,500, Abi,
Yes, sir.
divided by number of units, which is what? 66.4. Do you get that?
Yes, 66.4. Yes, yes.
66.4. Now, what is the next date? That means our current selling price is 6.4, and we have 700 on ground, Abi.
Yes, sir.
Okay, let's move
So the
on.
next is 22nd of July.
So are we
Purchase,
selling?
we are purchasing
Okay.
200 units at 880 naira.
How many units? 200, Abi.
Yes, by 80 naira.
18 naira. That'll give us how much?
15,000.
16,000. Now we need to do our WAFCO again, Abi. Yeah. So we had 700 before. Okay, 46,500. 46,500 plus 16,000. Abi,
Yes, sir.
that will give us what? 62,005. Is equal to, we had 700 on ground before plus 200 that we just bought. Abi?
Yes, sir.
Yeah.
100.
So now our WAPCO is now going to give us is equal to this divided by 900. Abi?
Yes, sir.
What did you get?
67, 68, 70. Okay,
You don't
6.4.
approximate.
6.4. 6.4. 69.4.
Even if you want to approximate, you leave one decimal place. Should be one decimal place there. So now 69.4, Abby.
Yes, sir.
So now we have bought everything we can buy, Abby. So you know
Yes, sir.
that anything you are selling now, it is 69.4. They did not say they bought anything again. And
Yeah.
other date is subsequent date. They said we bought what, 200 units, July 25, 200 units. We bought July 23, another 200 units, Abby.
Yes, sir.
And December 12th, another 200 units. Everything at how much? How much would you be buying everything? How
At
much?
50, 50
Eh?
at 69.4.
69.4. That's how much we'll be buying everything we got. Now, this will now be, are you saying?
Yes, sir.
So this is this about this. Do you understand?
I will go over it again.
Okay. For this weighted average, there's actually this thing that they use. Okay. I would solve it on sheet of paper or even on my Excel after this. There's actually a more clearer this thing. It depends on how you can do it. It depends on how you can actually solve it. It's the same logic, but presentation actually differs sometimes. Do you know? It depends on
Mm.
how. I would give I've forgotten the logic around that presentation. I think that one is clearer enough. It shows how many is left at a particular point in time. It shows plenty of details than this. So I'll do that on my Excel and send to you guys. Now, please also remind me. Okay, this same question. Do the LIFO and FIFO.
Okay, sir. Which
Yeah,
this question I okay, okay, okay.
this same question. Do the LIFO and FIFO. Do you get that?
Yes, sir. Should I
Okay.
use pen and paper or I should use exertions?
Anyone you're convenient with. Yeah. So that is that about that for LIFO, FIFO, accounting for inventory. Are you clear, please?
Yes, sir.
Okay. Um, my stem is on 30, but let's just look at the notes part of labor so that maybe by next class we'll do the calculation in that. Now we have accounting for labor. Are you there with me, please?
Yes, sir.
Okay. What do you understand by labor?
And the workforce employed in a particular organization to do the manpower job.
I love that so much. Now, element of labor cost. We have wages and salary. When is the labor is the workforce employed, workforce that they employ, they employ in a particular place, definitely they are working for them for what?
For wages or salary or remuneration.
Yeah, you have to collect your nobody works for free. Now, is either you are collecting wages or salary. Now, apart from wages or salary, there are additional overtime and all that is being calculated also. So now, basic wages and salaries of employees, additional payment of overtime working and bonuses, and other payment of top basic pay and overtime, such as contribution paid by employer into pension scheme for its employees. Employees do not pay the total earned by employees directly to their employers, directly to the employees. Employers must withhold some amount, e.g., income tax, and pay them to other bodies, state internal revenue on behalf of the employer, on behalf of the employee. Now, employer is the person that owns the business, the person that owns the job. Employee is that person that is working for the owner of the business. Do you get that?
Yes, sir.
Now they are saying for salary, it is not the whole salary. You know, there's something we call gross pay, net pay.
Yes, sir.
Yeah. Uh, your gross pay deductions have not been deducted from it.
Mm.
When it has been deducted, it becomes net pay, your net take home. That's what you are taking home. That's what falls into your account. Now, deductions usually depends on the company. Calculation depends on the company, but usually is around is usually it doesn't go more than tax, NHIS, NHIS, and pension contribution. Do you get me?
Yes, sir.
Yeah. So now, you said employers withhold some amount when they say, okay, your gross pay is 350,000 naira and your net pay is 290,000, and that means 290,000 naira is what is getting into your account. You see that 60,000 naira that was withheld in their calculation, in their calculation, they send that which is of tax to uh, internal revenue service, they send that which is of pension to your pension company, and that of NHIS to that to NHIS too. Internal revenue service is now called what? FIRS is now called what?
I don't know, sir.
Hmm?
I don't have idea, sir.
You don't have idea. NRS.
Okay, okay, okay. I have heard of it.
Mhm. NRS. What is the full name of NRS? What is the full meaning of NRS? I'm sure you have heard of it now.
Yeah, I've heard of it. Well, probably National Revenue Service.
National Revenue Service. That's the new name. It's not being called FIRS again. Now, we have direct and indirect labor. The general rule is that direct labor costs are cost of direct labor employees, and indirect labor costs are cost of indirect labor. Now, um, however, there are some exceptions to this general rule, and some cost of direct labor employees are treated as indirect cost. Two exceptions are cost of idle time and cost of overtime premium. Idle time. This is a time in which employees are paid and available to work, but are not doing any active work. The cost of idle time could be a breakdown in production. The cost of idle time could be a breakdown in production equipment or a delay in delivery of material from a supplier. Idle time should be treated as indirect labor cost. However, in order to treat idle time as an indirect cost, the cost of accounting system must be able to identify the amount of time that is lost as idle time. Now, idle time is usually you're actually meant to be working. You are at work, but there is no work to do. There is no job to do on ground. Do you get?
Yes, sir.
Now, let's say for people working in a refinery now, let's say a particular time of the year, they say, okay, oh, they want to do uh, total maintenance. You know, there are sometimes they will say, okay, this machine has issues, you quickly fix it. This machine has issues. But okay, oh, for these 2 weeks, so shut down every machine in this refinery. Let's do a total maintenance. Let's do environmental today. You get
Yes, sir.
now those people that operate machines, that deal with the machines and all, they are actually available to work at that particular point in time.
Mm.
But there's no work to do at that particular point in time because the the machine is actually going through maintenance phase. Do you get me? Now
Yes,
that
sir.
is an idle time. They are doing nothing at that point in time. Do you get me? So
Yes, sir.
there's a way of calculating for idle time labor that is done during idle time. Then we have overtime premium paid when hourly paid custom employees work in excess of their normal working hours. They are usually paid for overtime at a higher rate of pay per hour than the basic rate. The total rate of pay is the basic rate per hour plus an overtime premium. Total overtime hourly rate is equal to basic hourly rate over plus overtime premium. We'll do all of those calculations in our next class. Now we're just talking about overtime premium. When now idle time is when you are available but there is no work. Abi,
Yes, sir.
it's not as if you don't want to work, but there's no work, you actually be paid for that period in time too. Yeah.
Yes, sir.
But overtime premium is that time that you are not supposed to work, but there's work. That's why you must actually work at that point in time. There's plenty of work. Okay, oh, your work closes at 5. Okay, do we have people that can do overtime 5 to 8, 3 hours? Do you get? There's
Yes, sir.
additional, there's a big workload. That's why, okay, you're working at that particular period in time. You won't work because there's additional work and just go home like that. Somebody has to pay for that additional work you are doing. Am I right?
Yes, sir.
That is where overtime premium calculation comes in. Do you get me?
Yes, sir.
Okay, let me quickly run through this example. During week 1 week, Marshall works 48 hours. This includes 8 hours of overtime work. Marshall works 46 hours. Let's understand the question, right? Marshall works 46 hours, right?
Okay.
This includes 8 hours of overtime work. How many hours of normal work?
No, 38 hours of normal work.
38 hours of normal work and 8 hours of overtime work. Now, her
Yes.
basic rate of pay is 1,000 naira per hour, and overtime is paid at time and half. Overtime is paid at what? Time and
So
half.
by
Now,
time and half.
yeah, by time and half. What does time and half mean there? Overtime is paid by time and half means that, okay, oh, this person actually works, we actually pay this person 1,000 naira per hour, but overtime is time and half. 1,000 naira, that's what we pay the person. But for overtime, we're paying that person that 1,000 naira, 1.5 of that hour. So
Mm.
1,000 naira and half of that, which is you just do 1.5
Okay.
times 1,000 naira or 150% times 1,000 naira. Do you get?
Yes, sir.
So the overtime pay is now 1,500 per hour of overtime worked. Do you get?
Okay, sir.
Consisting of 1,000 basic rate plus a premium of 500 naira per hour because this person is working overtime. Can you calculate how much Marsha will be earning for that week? We need to first get how many hours of normal time did she work?
Okay.
It is said that she worked 46 in total,
46
but
hours.
8 of it is overtime. So definitely 46 minus 8 is what?
38.
38. So her normal working hours is 38, Abby.
Yes.
Put it down. Then we have 8 as our overtime hours. Put it underneath, down. Are you there?
Yes, sir.
Now let's calculate our normal working hours first. How much do they pay her for normal working hours?
Okay. Yes. 1,000 per hour. Okay, it's overtime.
Okay.
Give
So what is our total normal working hours pay?
5,000 naira per hour.
Mm-mm,
Is that
mm-mm. Our total working hours pay. We said she worked 38 hours for that
okay?
week,
Yeah.
normal working hour, Abby.
Yes, sir.
And they pay her 1,000 naira per hour.
Okay. 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 I get.
So what is our normal working hours pay for that week?
38,000 naira.
38,000 naira. Okay, we have gotten that. Now, how many hours of overtime did she work?
She worked 46 hours
How many hours of overtime?
overtime. Okay. Overtime is 8 hours.
8 hours. Now,
Mm.
and they said they pay overtime at hour plus hour
Plus
and
half.
half. Yeah,
Mm.
so that's 150% of the normal 1,000. Hour and a half means the normal pay plus half. And they pay her
Plus
1,000 naira here. Plus half is what? 500, making 1,500. That's where you see 1,000 times 150%. Do you get?
Okay.
Do you understand that? If you do
Yeah.
1.5 to time and a half is 1.5. 1.5 times
Okay.
1,000 will still give you 1,500. That means that's how much they pay her for overtime. You
Okay.
get? So now, how many hours of overtime did you now work?
So
We just talked about this now. How many hours of overtime
okay,
did she work?
overtime 8,000, 8 hours.
8 hours. Times how much did they pay her for overtime?
1.5.
Okay. That will give you what?
12,000.
Plus, what is the value of our normal working hours?
38 hours. So that
What
is
is
30,000.
30?
Our value of our normal working hours is 38.
Uh-huh.
So okay, per hour is 1,000 naira.
Uh-huh.
Okay. So
Which gives us what?
38,000 naira
Uh-huh. If you now add our overtime pay, uncle,
plus 38,000 naira. Okay, that will be 50,000 naira.
50,000 naira. Where did you now see 38 before? So her total pay for that week is what? 50,000 naira. Let me give you a cheat code. When you're writing Ican, if you see 2 plus 2, 2 plus 2 is what?
So
4. My brother, please press calculator. 2 plus 2 is naturally 4, but your head might be thinking 22 or even 23 in the exam hall. You might be on pressure, especially because you have calculated courses that deal with calculation. 2 plus 2 might be 4 here, but because you have done something that is 22 the other time, you just carry it and come and put here. If I see 2 plus 2 in Ican hall, me, I used to press, I will press calculator. I sabi am, but I go still press calculation. You see this hour plus half. Normal, as I've seen 1,000. I know that hour plus half is 1,005. But I'll still press calculator so that I will not doubt myself. It's not as if I don't know. I know it, but please let me be sure in my calculator. My head might be boiling at that point in time. It's a race against time. Do you
okay,
get?
so yes, sir.
Always press your calculator. The other time now you said 38,000 naira total pay because you already felt like we had calculated something before. Meanwhile, 50,000 naira is the answer. We had worked everything and you got everything right, but because you decided to use your head for total pay, you are losing a mark or two there. Do you get me?
Yes, sir.
Now, um, recording labor costs. There must be a system for relating the cost of labor to work that is done. There are various ways in which labor time might be recorded, but the main method are payroll record and the timesheet or similar time record. Payroll record can be used to identify employees as direct labor or indirect labor and charge the labor cost of each employee to each department where he or she is employed. Timesheets. Timesheets is a similar time. These are types of ways to record labor cost: timesheets, payroll record, and similar time record. Now, timesheets is used within a cost center to record the time spent by each employee on different activity or tasks. You know that there are some kind of jobs that it deals with time. You work 5 hours today, maybe
Mm,
per hour is 1,000 naira. Then you know that you have worked 5,000 naira job today. Do you get?
yes, sir.
So a way of recording this thing is timesheet. The time you go to work, the time you finished work, or the time you worked on this machine. You use 3 hours on this machine, you use 2 hours on this machine. Total is 5 hours. They'll pay you for that 5 hours you use on that particular machine. Do you understand me?
Yes, sir.
That is for timesheet. So accounting for labor costs. Timesheet is similar to what do you call it? Similar time record. Within an accounting system, indirect and direct labor costs are recorded and charged to appropriate cost centers and cost units. The record of labor costs are included within the double entry accounting system, where such an accounting a cost system is used, where such cost system is used, payroll accounting entries. Employees must make deductions from gross pay earned by employers must make deductions from gross pay earned by employees and pay amounts withheld to various third parties. The double entry necessary to reflect this is achieved by two journals. The first recognizes the payroll expense, which the other side of the entry recognizes as series of creditors representing the parties to whom the payment should be made. Now, let's say this is a payroll journal. Are you there?
Yes, sir.
Payroll journal now. On the credit side, is credit giving or receiving?
On the payroll journal, the credit is given.
Okay. Now, your gross pay is 350,000 naira.
Mm.
You add up 350,000 naira to your payroll, Abi.
Yes, sir.
Now, that 350,000 naira, it has to land somewhere. Double entry, Abi.
Yes, sir.
It has to land somewhere. Now, your bank account, let's say your net pay out of it is 290,000 naira. Your bank account will be receiving what?
290,000.
290,000 naira. Now, the remaining, how much? The remaining, what do they call it? The remaining 60,000 naira, let's say, tax, payee, tax payee, and HMO would go and land in those various accounts. Tax account will receive, let's say, 20,000 naira. Payee will receive 20,000 naira. HMO receives 20,000 naira. What they are trying to say here is payroll accounting system still follows the double entry standard. A money cannot land here or not have where you enter it as double entry. Do you understand me?
Yes, sir.
Yeah. So from next class, please, we'll start dealing with calculating the labor costs, the cost of labor. Please. Is that clear?
Okay, sir.
Are there any questions?
A minute, sir.
Okay.
Okay, so with this, I'm familiar with the LIFO and FIFO, so I will sit down with the weighted average calculations very well.
Okay. No problem. Please submit that on Tuesday.
Okay, sir.
Yeah. Thank you very much for your
Okay,
time.
sorry. Concerning the, I don't know if we will still treat the cost classification and the calculation using the high and low method and the, so I understood that variable. The aspect where I'm getting confusion is the, I saw a question in past question. So
Okay.
asking us to calculate you determine the cost price, the variable price, and the fixed variable cost and fixed cost. So they were now asking us to use lines of, okay, regression analysis. So when I checked online, I saw two different kind of formula. So I was in the one I saw, I arrived at a different answer from the one that was in Copper's question.
Help me send that question immediately you are done with this call.
Okay.
So maybe I'll look for 30 minutes, 40 minutes during this week to we'll just quickly treat it. I will talk on the group, so your colleague too will be there, so she'll learn from it too.
Okay, sir.
So whenever we choose to treat it, we'll learn from it. Yeah.
All right, sir.
Thank you very much for your time. I really do appreciate.
Thank you so much, sir.
Yeah.
And
Have a nice week ahead.
madam.
Yeah. Thank you very much.
Okay, sir.